Why are US stocks becoming so appealing for those of us living beyond the US borders? I'm Mike Loder. Let's find out. Hello everyone, it's great to be with you wherever you are watching. Australians are increasingly drawn to US shares recently, with record numbers diving into American stock markets. For more, I'm joined by Jess Amir, market strategist from the team at Moomoo. It's wonderful to have you. Jess, how has the accessibility of online platforms influenced this interesting shift?
Yeah, it's been incredible and sensational. And I think the reason that we've seen an unprecedented amount of Aussies investing in US shares this year is for a couple reasons, Mike. One of those is because we've seen the launch and rise and popularity of trading 24/7. So we've seen some large-scale platforms across the world, including we at Moomoo offer 24/5 trading. So it basically means that investors are, sometimes not sleeping throughout the night, and they're investing in US shares, I guess, when they should maybe be sleeping. So that's one thing. But on the other hand, what are they investing into? Well, we do know that a lot of Aussies are now chasing momentum, and they're chasing where you're seeing the strongest revenue growth rates and the strongest outlooks and pipelines, and we do know that they're in chips. So we are seeing an unprecedented amount of Aussies investing in US chips. So what are they buying? Well, across the globe and here in Australia, we're seeing Aussies increasingly buy stocks like Nvidia, SMCI, Taiwan Semiconductor, and they're also becoming increasingly tactical and taking on a little bit more risk, and they're buying stocks like GameStop as well. Apart from that, we're also seeing a large amount of buying and positions opening out into ETFs, ETFs such as SOX, and that's the world's biggest ETF that tracks chip makers. So really pleasing to see this shift, but more or less it's been brought about by 24-hour trading, and also, I guess, the popularity of AI and the mega thematic that's going to be here forever.
Yeah, absolutely, of course. It doesn't surprise me at all that the big tech is getting such interest. Let's talk a little bit about Australians' investment strategies evolving when it comes to increased exposure to these international markets. People tending to get better at it?
Yeah, they are. We're increasingly seeing Aussies and global investors become increasingly profitable. And this is, I guess, a little bit different to what we've seen over the last couple of years as well. If we do have a look at the ASX investor study, we've seen that that Australians are increasingly becoming more likely to take on more risk, and they're also opting to make larger investments as well. And this is something that we've seen here on Moomoo as well. But we do know that July, we've just kicked off the month of July, and this is traditionally the best month of the year for share market returns. So if we think about seasonality, looking back at history, the S&P 500 has gone up 2.6% in the month of July. Here down under in Australia, the ASX 200 has risen about 2% on average. And the reason for this, Mike, is because we do know that a lot of capital is put to work that was taken off the table, where investment managers really took profits off the table and then rebalanced their portfolios towards the end of 30 June, and they're ready to reinvest where they think will likely be the most hot source or earnings growth for the rest of the year. Also, just worthwhile pointing out, Mike, we do have an election year. Of course, we do know, looking back at history, markets are positive 80% of the time in an election. And last but not least, we've just come off a record first half as well. So thinking about when we've had a good jump in the first half of the year, traditionally throughout history, we do know there's a 90% chance that markets will also be positive in the second half of the year. And that's if you are invested in US stocks.
Of course, so it's certainly interesting times. Let's talk a little bit about that, the economic indicators and the corporate earnings impact stock market activity in July. It's an interesting one, and of course we've seen the first debate from the US happen. Anything interesting you wanted to touch on there?
Yeah, so I think this year and the second half of the year is really going to be driven by two things. When is the Fed going to cut? And second of all, what policies can we expect from whoever will be the new future leader of America, or indeed the corporate world. So I guess if we take the first point, we do know that that this week we're going to probably see a deterioration in the US jobs growth. And this will be the final indication that we do receive before the Fed's testimony next week. And so why is this important? Well, we are seeing signs that inflation is coming down, producer inflation is coming down, so tick, tick. And last but not least, we're starting to see a little bit of a deterioration, a little bit of cracks forming in the corporate America side. We're seeing job layoffs increase and employment growth is slowing, and we'll probably get that narrative fleshed out in some detail this week, Mike. And so that's why the market's thinking might come to fruition. What's the market thinking? Well, we're thinking now that there could be 2 rate cuts this year by the Fed, and then we could get solidification of this, and then the Fed chair could make that testimony and maybe green light this scenario next week at his testimony.
Jess, I want to thank you for joining us on the program and, of course, outlining a little bit more about what's going on when it comes to the US and the markets overall. I look forward to speaking to you again very soon. Be well.
Thanks, Mike. Have a great day.
All right, that's the program for the moment. Hopefully you've learned something from our discussion thus far. I, of course, look forward to seeing you all again very soon, right here on Ticker.